quite happy to be here today to moderate this agribusiness panel. What's different from sort of regular private equity investments? Where do you see the specific challenges? Where do you see the opportunities?
Having done about 36 deals in total over the last 9 years, we have had lessons learned from each of them. But just to be specific, my colleague Mike will mention 3 of the deals we've done in Kenya, so I'll mention 3 deals in Uganda. 3 of the key deals we've done in Uganda have been a poultry business called EAVCA Poultry International Limited, where we've been invested with our first fund, then again with our third fund. Then, of course, the other business I could be happy to mention is a business in Uganda called KK Fresh Foods, exports fresh fruit and vegetables to the EU. Again, as you all know in the press, there's all kinds of EU regulation and scares around some of these fresh exporting businesses. But again, it's one of those businesses that we are keen and have now been invested for 1.5 years, and we are seeing light at the end of the tunnel.
I'll mention just 2 of them in Kenya. One of them is AfriCert, which is a business that has certification of products into the European market and also getting quality standards. And these are businesses that we invested about 5 years ago and exited about 2 years ago. And the business did quite well using our own capital. It was an equity deal, so it was a successful exit. The other one we did was Eldoville. It's about 1.5 years ago, 2 years ago. This is based out of here, Karen, and also in Nyandarua, which is doing production of yogurts for the high-value yogurts in the Kenyan market. So far, so good. Sorry? Fingers crossed, as always. And we're hoping it will continue to do well. Yep.
Yeah, so Patisa is, we're a multi-fund fund manager, and our strategy is to have separate funds focus on each sector. Yeah, so outside of food, we also have healthcare and housing. In the food space, we have a $250 million fund, and the key focus is anything along the food value chain. This is everything from primary, so we can actually, we have plantations in the DRC and Sierra Leone, and all the way through processing and consumer goods, and hopefully even into retail. So the entire food value chain proposition. The obvious challenge, I think everyone in PE would say, is always people. It's an extremely difficult business to actually run, both internally but also even within the portfolio companies. It's very easy to create the fantastic spreadsheets that show your X, but it's a very different thing when you actually look at the companies themselves. But specific to us in agriculture, our biggest challenge, I would say, is time. Just for fundamental reasons of biology, actually. The average, to actually get a farm to work takes at least 5 years.
Well, we'll go to the other side. Kandini, tell us a bit about what you guys do to support investment in agriculture.
The East Africa Trade and Investment Hub it's a $65 million presidential initiative that was started in 2013. And what we're out to do is simply to help unlock investment capital. And since we do not have our own balance sheet to invest, what we've decided to do is we've come up with a very interesting mechanism where we are actually subsidizing certain services for investors. So what does that mean? We partner with people like Ascent Capital, and we say, look, as the US government, we will pay for services such as due diligence, market forecasts, expansion reports, etc., to help these investors actually invest in target companies.
Value. And what are you seeing in terms of exit opportunities? Are you seeing the capital markets becoming any more attractive in terms of agribusiness, let alone other sectors? Where's the way out?
For our particular case, we have invested mostly in SMEs. And so the first port of call is to try and get the original shareholder, the sponsor, the entrepreneur, to buy back the shares from us. And that has happened in a few cases. In other cases, we've had trade buyers coming in and have actually bought the shares. And also, we've also had a lot of debt investments, which are self-liquidating. So that's how we've actually achieved some of our exits. Yeah.
Thanks, everyone. Give them a hand, please.